Hey, what's up, everyone? Happy Thursday. It's the 9th of February, and we've racked up a second green day in a row. We had a couple of red days to start the week, and we followed that up with 2 consecutive green days. Green days over gold as well, so that's a good thing. So I didn't trade the small account today. So if you're looking for the small account challenge video, there isn't one today because I've not taken any trades on the small account challenge. Quite frankly, the market was still very choppy, very sideways, not a lot of action. So it was difficult to take trades on a small account with not much equity. Now I have got on my main account, and I kind of set myself up to start off with a losing trade, and we went $4,000 down, $4,500 down with that. I think we actually did go about $6,000 down at one stage. Finished the early stream. Go and watch the early stream by all means. Finished the early stream. It was, I think it was finished about $4,000 down. So I recovered a couple of thousand on that, but finished about $4,000 down. Managed to recover most of that with HPCO on the back of a deal with the DOGG, Snoop Dogg. Yes, you heard that right. So HPCO, it's they earlier in the week announced a deal and launched a Snoop Dogg branded marijuana product. And today was when the market took notice, and that moved up really well. And we got a huge, particularly later in the day, and I'll show you that trade as well. We got a couple of pieces on that, and then later in the day that got us green. So we're about $2,000 down coming into power hour. So we're about $2,000 up coming into power hour, which is the last hour of the regular session. And we traded a little bit. We were kind of up and down, choppy. Again, trading the same stock. We finished $6,000 up on that one, but that left us about just under $2,000 up. Well, okay, let's have a look at what's happening after hours. And this is where the magic happened. After hours, we had PayPal with earnings, we had LYFT with earnings. It's a few blue chip companies, a few good companies that coffee table names that had earnings after hours. So I thought, okay, the 2 I'm going to watch, PayPal and LYFT. Now, PayPal, I don't know which way they're going to go, but LYFT, I was kind of expecting them to rally on the back of the way that Uber has performed. Uber did some great results. They posted really good results, higher than expected, higher than estimates. So Uber, I thought LYFT would do the same. LYFT sold off. I don't want to be taking a preemptive strike with earnings, because first and foremost, if you think that something's going to have good earnings, it might not. If you think something's going to have bad earnings, it might have good earnings. So you never quite know until they drop. Then there's always the market reaction. So you never quite know what the market reaction is going to be. So I'd rather just, because you might have great earnings, estimate beats across the board in terms of EPS, in terms of revenue, in terms of sales. Across the board, it might be great earnings report, and it still sells off. And the converse could be true. It could be an absolute dog of an earnings report, but the stock rallies. The market looks kindly on it because of, for whatever reason. The market can react irrationally, so you don't want to try and preempt the market move. So what I did is I waited for the news to drop. LYFT sold off, so waited for it to sell off, find an area of resistance, and as it broke that resistance, when I say resistance, it's actually support if you look at it, but from a shorting point of view, it's a resistance to the downward pressure. So find an area of support, and as it broke that area, that's when I entered for the break of the whole dollar of $14, and rode that down. Covered to start off with at 13.20 as it found support at $13, and then I went short again as it broke $13 and got the rest. So I managed to get not just $4,000 on, just over $4,000 on LYFT, get over goal. So I'll tack that trade, very quick trade. I'll tack that trade on the back of this this recap. So let's take a look at what we've actually traded, when we traded it, and so funnily enough, that's LYFT as I speak. So the first thing we traded was C-Star Medical. So let's put this on the 2 minute. We'll put these on the 2 minutes, so we're not having to go right the way back. We traded C-Star Medical. We got in as it was breaking new highs here. Broke new highs. We got into the break of the $0.50. First, we took some profits. Great, no problem. So then, as it broke new highs, we added to the position, and it pulled back. So we got out for a loss. Then it started to make its move back up. So we re-entered. And then it pulled back, and we got out for a loss. So we ended up $4,000 down pre-market. Not a good start on the day. That was C-Star Medical. It had a good catalyst as well. The reason I thought I'll hold till to kind of 620. I was looking for a bounce at the first. I thought, okay, I'll hold as we started to make a move up. I should have taken profits here. It's got in here, and I should have taken profits here. It bounced, but then I wanted a bounce at the $0.50. Didn't happen. If it had been a regular market and I'd had a stop in place at the $0.50, I would have got out. It would have instilled my discipline. And this is the problem that you're always going to have day trading, is being disciplined enough to stick to your strategy and stick to your trade plan. And I should have got out. So we've already got support there at the $0.50 here, support at the $0.50 here, support at the $0.50 here. So I'm like, okay, I'll hold it to the $0.50. Once it broke the $0.50, I should have been out. It broke that support level, should have been gone, but I didn't. I thought, okay, well, the VWAP's not too far away. I'll hold to the VWAP, and I got out at the VWAP. I should have got out at the $0.50. Shoulda, woulda, coulda. Unfortunately, that's the way it is. But if you've got stops in place, and this is why it's difficult trading pre-market, you've got to rely on human emotions, and you've got to rely on yourself to be disciplined enough to cut your position when you reach that stop loss. Relying on arbitrary mental stops, and you've got to cut your position as you reach that. You can't be lax around your stop positions. So I'm kind of waffling a little bit on that one, but I held it too long, held the losing position too long, and that set me up for the day. It was a kind of very choppy day for most of the day until we managed to get a little bit of this back, but it was a choppy day for most of the day. We traded Kavana. So Kavana was the next thing we traded. We got a little bit with Kavana. The first position we took with Kavana was a loss, and then we traded later in the day, and we were $150 down on this, and then we got $500 later in the day. As it made its move back up, and nice earnings on Kavana. We traded, as I mentioned, HPCO, or HPCO, whatever you want to call it, whatever flavor you're having, whatever flavor you are having, it's Snoop Dogg flavor. So Snoop Dogg flavor, we traded this after the open. You see straight away it moved up into a halt. Then into another, gapped up into another halt. Then we got in as it broke the $0.50. It did pull back a little bit, so our first position was a loss. But then as it started to make moves back up, we got back in and then rode it up, and we started to get profitable on this. It did start to pull back, and we got stopped out here. And then as it moved back up, broke $3, we got in again and had a bit of a profit there. In again, and a bit of profit here. So we finished profitable on HPCO, but it started to get choppy, just sideways, moving sideways. And then we traded it later in the day, and I'll not come back to this later. I may as well do it now. So you see that this moved up later in the day. As it broke $3 again, we got in, rode this up, took profits, added to the position, took more profits. As it started to move back up, we're adding, subtracting, and then we put a stop in place up at the kind of as a break of $4 and a trailing stop. It went up to 420. We had a 20-cent trailing stop because the range was approximately about 20. It was about 15 cents. We'll put a 20-cent trailing stop in place. Went up to 420 and then came back and stopped us out. We then traded it into the close. and we were kind of break even at the close. First trade went, we made a little bit of money. Next trade, we actually lost, and then we lost again. So it's kind of break even a little bit with HPCO at the close. We finished $6,000 up on HPCO, which covered the ICU loss and $2,000 besides. Our next trade earlier in the day, just after we traded HPCO, our next trade was Tesla. We traded Tesla to the short side. So Tesla, you can see here, it was moving up really good. You kind of a double bottom setup there. So it moving up really well. Tesla's a much higher price stock, so you've got to be careful. You want it to be trending, or you want to be looking for those signs of those reversals. It moved up, and then we had multiple consecutive candles to the downside. So I'm thinking, okay, ideally 212.50 would have been my ideal spot to get out, to get in to the short side, looking for that reversal. And I got in here, managed to get a little bit, but then it didn't look like it was going to break below 210. So as it started to make its move back up, I covered the position for a very small profit, $45. Basically covered the trade. I took 1,000 shares, and Tesla, it did sell off later in the day, as you can see. So perhaps I could have got more, went all the way down to kind of 209, and then rallied again later later in the day, and then came back down again. So Tesla didn't know what way it was going to go, didn't know what way it wanted to go, if truth be known. So what did we trade after Tesla? We traded. We started off a low price. Probably one of the biggest movers intraday was SelectQuote. Our first trade was a loss. We got in here for break of new highs, and then as it pulled back, we got out for I think we had a 20 cent. We gave it 20 cents and got out before it broke the $2. Then we traded it again. So SelectQuote, we made a little bit of profit on this. Then so on the way up, we took some profits there, and then we got out for the remainder there. And so we finished just slightly down. We almost made back what we lost in the first instance on this trade. We almost made back what we lost, but we kind of $150 down. So not a big thing. $150. We spend that on the night out, so it's not a big impact to the overall day. Of course, we prefer green trades, but this is one of the ones that went against me on the day. Then we traded HPCO again, Kavana again. I've already covered those off. KPRX. So this was coming into power hour. KPRX, throughout the day, if I kind of zoom out, a couple of times during the day, we got this move up pre-market, and then it looked like it was going to make new highs. Tried to test that pre-market high here, didn't manage it. So I thought, okay, great. Then it started making a move up. I thought, okay, great, it's going to start making a move up. Didn't sustain. So we're getting kind of a lower swing highs, and I'm thinking, okay, it's going to break out at some stage. So it went up, tested $8 again. Just looking at the movement on this chart, it just made me feel like, look, it's trying hard. It's going to move up, and it's going to break $8. It's going to move back up and break $8. So they got this move up, broke over the VWAP, the pullback. So we entered for the candle, make new highs. We got in. It didn't really break out. So then we cut our position. It didn't look. It looked weak. Is essentially what it did. We got in on this green candle here. So we got in on this green candle here. And you can see straight away that this is the big volume candle, which is, breaking new highs, makes sense. Enter, you've got the confirmation, but we didn't get the follow through. So as it pulled back, I just cut it for a small loss, and we lost $90 on that. It wasn't a huge. I'd only got in small size, so it wasn't a huge. Huge trade, but it just never. There was a couple of trades on this that I could have taken, and I'm glad I didn't, because there was a lot of fake outs, and that's what made me worry about it. So you've got the big spikes up, and then the huge pullbacks afterwards. Look, straight away here, Big spike up, huge pullback afterwards. That made me a little bit worried about trading it. You got this move up at the open, big pullback afterwards. Made me trade it. This move up, big pullback afterwards. So it kind of had form for, big withdrawals after it's made any kind of gain. So I was a little bit wary of it, and I was right to be. So yeah, that was KPRX or Kiora Pharmaceuticals, which is it did well for. We traded a couple of days ago, and it did well for us. We're profitable on it on the week, Kiora Pharmaceuticals. So then, kind of coming into the close, we're about $2,000, just under $2,000 green on the day, and any green day is a good day. But I'm thinking, okay, I'll have a look at the big names, the coffee table names that are going to get the attention in terms of earnings drops. We're still in the middle of earnings season, so what blue chip companies, what coffee table names? The two that jumped out at me were PayPal and LYFT. Now, PayPal, let's have a quick look at PayPal. I didn't trade PayPal, but it's worth having a look at PayPal because you can see the swings after hours here as they drop their earnings. Swift move down and then a huge move up, and then it's kind of sideways. So I'm glad I didn't trade PayPal because it was very choppy, and you didn't really know. Whilst the range was quite large, I mean, you're looking at what, $10 to $12 from 73 to 85. You could have taken. I could have taken what, 5,000 shares. Well, not. I would have taken 3,000, 2,500, 3,000 shares there of this based on my account size at the moment. If I've taken 2,500 shares, that's one of my buttons. So I'll take 2,500 shares, $10 move. I could have made 25k on that. So maybe I could have taken PayPal as it gone long as it pulled down. But in reality, I probably would. If it gone long, I probably would have gone for a short. So hindsight's a wonderful thing. Now, I did trade LYFT, a bit more predictable, a bit more sustainable. So the numbers came out, and it showed signs of slowing, bit of support or resistance to the downside. $14. As soon as it broke that, I got in and rode that down. First cover at 30. When it started to look like it was going to make a move back up, I covered again, re-entered for the break of 13, and got in and then covered the position. About 200 or whatever dollars that I needed to get to goal. All I was doing with the second entry was basically me just looking to get to goal. I was about $200 away from goal, and the first part that I covered, I left me with $5 to get to goal. So I thought, okay, I'll wait till I think I had about 500 shares left, and I'm like, okay, I'm going to wait until I've got at least $5 in positive before I cover. I'm not leaving this trade until I've got over goal. So I ended up getting over goal by $45. So a good trading day. I mean, yes, I'll have commissions and charges on the back of that, but as I say, I'm budgeting about 15-16% for my target across the year, which I did last year. It was a similar thing that I did last year. I probably need to do a bit more because the commission structure's changed this year since January with my broker, so it's actually going to cost me a lot more. Maybe I need to increase my goal for gross numbers. We'll see how we're getting on. I'll do the first quarter. At the end of March, I'll reevaluate and see, am I on target? Do I need to reevaluate my goals? Is an average of $6,000 a day going to get me to that 1.2 net? It's going to get me to the 1.5 gross, but is it going to get me to the 1.2 net? And I'll take another look at after March and reevaluate. So that was my trading done, and I would say the best trade was the LYFT trade. It was the cleanest, it was the swiftest, it was the best. And what I'll do is I'll tack that on. I recorded it, so I'll tack that on. You can watch that after this recap. But that was the best trade I took today by a long shot. So let's have a look where that puts us. I don't think it gets us out of the drawdown just yet, but it's a huge step in the right direction. So this is February. You can see we've had some good days, two big red days. Well, one big red day on Monday, followed by a small red day. Then we've had two good green days over goal a nice good green day over gold tomorrow. You know, we'll have made good steps or good inroads to clearing that drawdown. So what does that look like for February? I'll take a look at the year in a second, because we're only in February. We're only a couple of weeks in, almost into February. So February, we're green. We're profitable in February with $10,000. So if you had $10,000, if you made $10,000 a month, I think most people will be happy with $10,000. You're in the top 5% of earnings globally, for sure. Most countries, if you're in the US, you're in the UK, if you're earning six figures, you're in the top 5%. If you're in a country that doesn't have, you know, if you're in Italy, if you're in Spain, if you're in some other countries, then, you know, six figures is still top, but, you know, it's probably top 1% in those countries. So you've got to put it into perspective. $10,000 a month is good earnings. It's probably what my base salary, well, it's equivalent to what my base salary would have been in my last 9-to-5 position that I had. Of course, I had bonuses and commissions on top of that as well. So just to have done that in, what are we, the 9th, 2 weeks. So this is double what I would be earning in pro rata in my last 9-to-5. And this is I consider this performing badly in February. So what do I mean by performing badly? Well, let's look at this. So I'm setting myself a daily goal of $6,000. We're now $1,500 is my daily average in February. So it's not great. And we'll compare this. So $1,500 is the daily average. $10,000 in February. Obviously, we've got a lot of trading days left. But I look at my trade selections on point. I'm not too worried about my trade selection. What I am worried about is my risk versus reward. So if I look at the gains I've made versus the losses I've made, there's not a huge difference. So if I look at the K ratio, a 0.26 negative, that is absolutely, and that's to do with risk versus reward. That should be 2 or better. Profit factor 1.2. It should be 2 or better. So I need to improve on that for sure. Now, going back to what I was saying about, we've had 2 good green days in a row over goal. That's great. That's fine, but we're still in drawdown. So tomorrow, if we're going to get green on the week, because this drawdown is taking place this week, we need a $14,000 day. To be realistic, I'm still setting my goals at $6,000. If I can get a $500 day on the small account, it's like $6,500. Great, so no problem. So if I can get $6,000 in total across the 2, if I can get $6,500, maybe $7,000, great. Am I expecting to have a $14,000 day on tomorrow, Friday? No. It is the swift answer. I think that's, have I had $14,000 days? Absolutely. I had, 4 or 5 $20,000+ days in January alone. So it can happen. It might happen. I'm not expecting that. I'm not banking my money on having a big an over goal by more than 2x. So my goal is $6,000. That's what I'm looking for tomorrow. So at least we're back in the green for the month. Okay. So let's compare where we're at to where we are on the year, and you'll see what I'm talking about. So on the year, 185k profit in less than 2 months. So it's like 7 weeks into the year. My average, so going back to February, my average daily gain in February, because of that huge drawdown on Monday, is $1,500. My average for the year is 7,000. So having a good year, yes. Having a good February, no. Look at the ratios as well. A good K ratio, which is to do with risk versus reward whilst you're in the trade, in terms of your expected outcome, potential, you know, the whole algorithmic calculation around it. I said 2 or better. I'm currently at 3 for 2023. So I'm having a great year in terms of my risk versus reward. Profit factor is better than that. It's 2.12. My accuracy in terms of trade selection, not much difference. 2 to 1, a little bit better than 2 to 1 across the year. In February, it's 2 to 1. I've just not managed my risk. That's where in February, I've just not managed my risk as well as I should have done. I've held on to my losers a little bit too long. Today was a perfect example with ICU. Held on to that a little bit too long. And what I'll do is I'll show you that as well, because holding on to it too long when you should cut it, and that sets you up for if your first trade is a losing trade, you've got to dig yourself out of a hole. And that's not always a good thing to do. So if you look at across the year, this equity curve, it's quite volatile because I am an aggressive trader. I do have big swings to the upside and big swings to the downside. And unfortunately, I've got to deal with those big swings to the downside. I can do that as long as I have those big swings to the upside as well. So that's essentially where we are at the moment. That's the numbers for the year. That's the numbers for the month. So we've still got a way to go to get out of drawdown. We've still got a way to go to get out of the red at the moment in February. Oh, well, we're in green in February, but get out of the red in terms of on the week. We've got one day to get to do it. So if I go into next week and I'm still holding that drawdown, I can have a green week next week and still be in the drawdown. So I really would like to clear it tomorrow. Am I going to expect to clear it? Probably not. Is it possible that I can? Yes. Let's see what happens. Would you like to find out what happens? Would you like to watch me doing it as I'm doing it? Come join me tomorrow. I'll be trading from 2 hours before the market opens, so from 7:30 market time. However, I'll be streaming my trades live right here on this channel from 8:30 market time. For the last hour of pre-market, you come join me, come watch, come contribute in the chat. Let's trade together. I'm not offering stock picks. Don't think that that's the case. I'm just saying let's trade in company. There's a whole bunch of people that join this channel every single day while I'm trading live. An hour before the market opens, 8:30 market time, East Coast or New York, whatever flavor you're having. It's 1:30 p.m. here in Ireland, 1:30 p.m. in the UK. And I'll be doing it tomorrow. Let's see if I can recover the drawdown. I think it's a lot to ask, $14,000 in one day. I've done it before. Can we do it tomorrow? If I can have 6,000 tomorrow, I'll be very, very happy. So come join me and we'll see what happens. Before I leave you with the replays of today's trades, make sure you smash that thumbs up button. Really appreciate it when you do. If you don't like me, if you think my face is offensive or what I'm saying is offensive, smash the thumbs down button. Do one thing, smash one of the thumb buttons. Make sure one of the thumbs is checked before you finish this stream. It just really helps with the YouTube algorithm. Up or down, the interaction is really appreciated. And if you want to be notified when I'm going live or when I drop a video like this, subscribe to the channel and hit that notification bell. In the meantime, enjoy the rest of your evening. I'm going to finish the rest of my wine. Enjoy these trade replays, and I'll see you tomorrow, hopefully. ICU, C-Star Medical. First trade of the day. Wasn't this up at 670 on the bid? Been there already. High of day currently is 669 now. Lock some of that in. Just nice to get a green start. Okay, well we can address that. No problem at all. Right after I get out of this trade. How much does the stock scanner cost? It's a subscription. If you go into the description, there's a link there. You can get it for free for 14 days, and you can get a trial of it. And if you like it, you can get a discount. The there's like 3 or 4 different levels. Get out. So look, we made $50. So there's 3 or 4 different levels. Hey, Stone Cold. And support at the $0.50 previously. Buying the dip at support. If it breaks that support level at the $0.50, then we get out for a nice loss. It does have a catalyst. C-Star Medical. Spreads getting a bit wider. 4 or 5 cents. Now they're back to a cent. All right, I'm gonna have to get out. This is dipping way lower than I want it to, but kind of waiting for it to bounce and trading on hopium right now. You can't put stop losses in place pre-market. They just don't work, unfortunately. Otherwise, I would have been out at 650. That's where the support was previously. And this is what I'm talking about with discipline. I'm showing a lack of discipline at the moment. I'm looking for a bounce on the VWAP. I've reduced my exposure a little bit. I will be dumping it if it comes back down again. It is. So, yeah. That might be finding support at the VWAP there, but you know what? If it goes back up, I can get back in. It's not a problem. Get over 3,000 on this. I'll be a very happy bunny. I'll look for another entry. Oh, just shy. For the pullback or the pull up, same what you trade it exactly the same way, just to the downside. I'm looking for 200 bucks. I'm looking for 10 cents. Of 80. Gone. $12.80. It needs to be under $12.80, not above. Under $12.80. Come on. Do as you're told. Oh, PayPal's selling off too. It's struggling down there at 13. It's finding a bit of support at 13. Made 4K off it so far. Sorry, not 14. Want to get to goal and get out. $12.80 is my target. $12.80 on the ask. $12.87 there. Still got 1,000 in there, and I'm 5 cents, $5 away from goal. There we go, 500 shares in there now, and I'm over goal. Break even, I'm out. There we go. I'm over goal. That's how it's done, kids. That's how you trade earnings after hours. Okay, done. 6 grand. Happy days. Get in. Bang. Boom. What did you say?